Good morning from Simply Media and Deaver Brown, the publisher. Today is about the New York Times and Dealbook, their business free email every day. It's a very good one. Today, however, on June 30th, they let their political biases take over. They wrote about the market going up and said it was unexpected. The point is, the market is economically driven. We're not back in 2000 with foo-foo and what's going to be and people losing money. Today, the market is based on earnings, profits, and opportunity. There are a few stocks like Uber and Lyft that are risky and have a future. Perhaps good, perhaps not bad, but there aren't many of them. Most of the market is driven by cash flow and earnings. And the point that Dealbook sidestepped is the Trump policies have worked. You may not like Trump, and there are many things not to like about him, according to people, but the economics are sound. Cutting taxes works. It always has. And doing your best to cut regs works, and of course some are good, but lots of them are just in the way. So the point is, the market's been doing well because this year profits are way up. Stock buybacks are picking up any stock that's loose. Every time the market goes down, they buy it. Why is that? Well, they've got $1.5 trillion to spend, and they're not fools. So every time the market goes down, they buy on the dip. And that's why the market can't go too far down. Also with stock buybacks, $1.5 trillion per year now and accelerating from $1 trillion last year means that every stock bought back does not have to pay a future dividend. And those companies that are prosperous enough to buy back stocks generally pay dividends, and they treat them like debt. In other words, they pay the interest. So, think of it this way. Every stock that's bought back retires a dividend. And in this process, shareholders that remain do better. Shareholders that sell have to invest in something else. And that's what's going on. So the point about all this is it's not unexpected the market's going up. Now there's a difference between Main Street and Wall Street. And Wall Street has a prejudice because index funds are going up, low cost, self-directed, very much like in taxes, TurboTax. Fill out your own, save the money, don't pay accountants, don't have to deal with them, or lawyers not dealing with them by having pre-done forms or less complex arrangements. And of course, with modern growth related to less complex businesses, more like royalties than former businesses, without factories and all of that complexity, companies make more money with less effort. So that's what's going on. So this should not be a surprise to anybody. That doesn't mean it's good. It just means it is the way it is. And it will continue as long as the tax cuts are in place, and every day some stocks taken off the table. I mean, think of it this way. $50 million of stock is removed every single week. The dividends are removed, and the people that get that money have to do something with it. And generally speaking, they reinvest, which means less stock, more money, more demand, stock goes up. Thank you from Simply, and review this. That doesn't mean you agree with it, but at least consider it.